Another piece of economic data weighing on the Fed today: foreclosures on the rise. The number of Americans who may lose their homes more than doubled in August from a year earlier, according to a report out today. California led the way, followed by the state of Florida. Some economists say 2 million homes could be foreclosed on over the next year as subprime loans with adjustable interest rates reset, requiring much higher monthly payments that some borrowers will not be able to afford. Meantime, here in Washington, the House of Representatives passing bills today that could help at least 200,000 homeowners avoid foreclosure. The legislation would let the Federal Housing Administration insure more loans, helping subprime borrowers who need to refinance to get out of loans with ballooning rates. It still must be approved by the Senate and also signed by President Bush before it can become law. But the big move today, of course, it could affect the housing recession in the housing market, the Fed's decision to cut interest rates a half point. Join me now from Billerica, Massachusetts, is Andrew Chaban. He's the CEO of Princeton Properties and a member of the National Association of Home Builders Executive Committee. He's coming to us from a multifamily project of Princeton Properties there in Massachusetts. Thanks for the time today. Appreciate it. And I'll get your reaction right off the top. How will the rate cut affect your business?
Well, I think the rate cut is going to help everybody, Peter. It's a bold move on behalf of the Fed and Mr. Bernanke. We certainly appreciate it from the National Association of Home Builders perspective. I certainly believe that this is going to help everybody, most especially those out there who are looking to, who have adjustable rate mortgages and are ultimately going to be able to refinance those mortgages into potentially a more fixed rate product. I think this is going to help stabilize the housing market quite a bit.
How closely were you watching this, other home builders around the country? And of course, so many economists were talking about a quarter point cut. The fact that they went 50 basis points, is that significant in your view?
I think it certainly is significant. I think this is a bold statement as opposed to a weak statement. I think the majority of economists believed that a quarter point cut was ultimately where this was headed. The half point cut is certainly welcome news. I know that there was some balancing that needed to be done, but I think ultimately Mr. Bernanke got it right and his committee got it right. There's no question that the housing market needed to be stabilized, and this is truly a strong signal.
Talk to us about the housing market in Massachusetts, where you conduct your business. How bad are things?
Things are certainly not that bad here. We have less production than most of the markets that produce significantly more housing than we do. I certainly wouldn't compare the suburban Boston market to the Phoenixes or the Dallases or the Las Vegases of the world. We don't produce as much housing. We didn't produce as much housing that would have had some of these exotic mortgages or subprime mortgages that were attached to them. So I don't think we went up anywhere near as much in the housing market, nor do I think here we're going to fall anywhere near as much. And so I don't believe the Boston marketplace is one where we've seen any of the real significant highs or the real significant lows, Peter.
Do you think this is going to have any direct effect on people coming through your door? I know you've got a lot of rental properties, people who perhaps might be considering a house once again with this kind of a rate cut and not considering one of your rental properties.
Well, clearly it's going to allow people to move or continue the move to home ownership. However, we're very confident in the rental market. We like the rental market here. As I said, there are some natural barriers to entry in our particular marketplace for rental product, and so I don't believe that this is going to have a significant effect one way or the other on Princeton Properties business. I do think on a whole this is certainly very good for those with adjustable rate mortgages, will be great for the economy. As far as the rental business here in suburban Boston, I'm not sure at all that this is going to have any significant effect one way or the other.
You make the point that there may not be that much of effect on immediately in that part of the country. Do you make the point in saying that make the point echoed by some people out in the marketplace right now, some perhaps even here in Washington, lawmakers up on Capitol Hill, that this Fed move may be an overreaction, that Ben Bernanke and his colleagues are bailing out home builders around the country, other parts of the country where this is having a big impact, the housing recession, and perhaps this is too much of a move, that those people need to feel a little pain here?
I certainly don't think it's an overreaction. Without question, there was a balancing act that Mr. Bernanke and the committee went through, and there's certainly no question at all that in my opinion, that they came out the right way. They did take the risk of inflation into account. I think that that level of tolerance is still at about 1.9% as compared to this period last year, 1.9% inflation, which is certainly within their tolerances. And at the end, I certainly think they got it right, Peter.
Just finally, let me ask you, with this Fed move, does that mean Congress does not need to act?
I think Congress certainly does need to act. I think the fact that the FHA modernization bill was passed through the House of Representatives today, and the Senate Banking Committee will be taking that up in markup session tomorrow, is another way for this issue of subprime or exotic mortgages can be dealt with. I think there's no question that there's more that can be done with the GSEs, with Fannie and Freddie, and allowing them potentially to have a larger role in helping out with this. But I do think that coupled with Mr. Bernanke's reaction today and his committee's reaction, the FHA bill that's going through and some potential GSE legislation, I think housing's headed back on the right track, Peter.
All right, Andrew Chaban of Princeton Properties, thanks very much for your time. Appreciate you joining us from Massachusetts today.